Hi, I'm Dave,
And I'm Paul.
and we're going to challenge you to transform your financial future through the principles of the most profitable business in the world, banking.
We believe everyone should be involved in two businesses, the business that you're in and the banking business. Everyday people can replicate what bankers have been doing for centuries to leverage capital and build wealth through private lending.
Join us as we uncover the truths about money, expose lies and myths, and flip conventional financial advice on its head. Here we go. Well, Merry Christmas, Paul.
Merry Christmas to you.
Thank you. Yeah. Wow, look at this. We almost coordinated. It's like we had the same thing in mind. This is what I wear
Unbelievable.
all day long during December, the holiday season.
It's the best month, man. I mean, my birthday's in December, but I just love it. Love the holiday. I like the Christmas music that's on the radio. Dude, it gets dark early, and Christmas lights are out. So, yeah, it's nice.
It gets dark real early, like 4:30 where I am. So those lights outside coming on at like 4 o'clock.
Yeah.
Yeah. So what's your favorite Christmas song?
Oh man. I like the old stuff. So, I'll listen to all the old famous guys like Earl Ives, Holly Jolly Christmas,
The Christmas classics. I like putting on like
Christmas
a Dean Martin Christmas or Frank
Dean
Sinatra
Martin.
or
all those guys.
yeah.
That's what I play in the car, and it annoys the kids, but I think they're starting to like it.
Yeah.
Like it's better than like Taylor Swift Christmas or whatever. Yeah.
Yeah.
Terrible.
Yeah. I like my favorite like real Christmas song is probably Have Yourself a Merry Little Christmas. I like that one. And then my favorite fun Christmas song is probably Robert Earl Keen's Merry Christmas from the Family. It's like a redneck Christmas because it actually reminds me when I was a kid, we would meet at my Christmas Eve. My entire extended family would go to my grandpa's house. And my dad had 7 siblings. So everybody and all the cousins, only 2 of them like lived out of state. So everybody else was there. They lived in this tiny little house, chain smoked. So we leave there smelling like a smokestack.
Yeah.
And we were all stuffed, probably 30 of us in this tiny little living room doing Christmas. And it was, I guess I'm redneck extended family. But yeah, that song always makes me think of those fond memories. So.
Yeah. My Christmas Eve consisted of chain smoking grandparents as well. And I was like, you go home just smelling like it, right? It was just like, this is miserable.
Yeah.
It seems so long ago though, it's
and you didn't notice it as much because that's back when, you had
that's the way it was.
Smoking sections in restaurants and non-smoking section. So you were used to it.
Yeah, but that's just the way things were.
Now, I was driving home last night in the car in front of me, flipped a cigarette.
You saw somebody?
Yeah. Well, they flipped a cigarette out the window and I could smell cigarette smoke.
Yeah.
In my truck.
Yeah, it's pretty gross. We have a similar problem around here, except it's marijuana smoke. But
yeah, kids are like, oh, what stinks?
Yeah, well, they know it. My kids know that smell because it's everywhere around here.
Yeah. Well, let's get back to Christmas. We got sidetracked on stuff that's not Christmas. You taking time off?
Yeah, we're taking 2 weeks.
Oh, you're going to
leave.
Italy. We talked about this last week.
Yeah,
you're going to Italy.
Yeah, going to Italy. Yeah,
that's awesome.
So good friends of ours over there, and looking forward to it. I've always wanted to go. I've never been, so.
Going back home.
Yeah, that's right.
Yeah, nice. Our kids have like half of them, actually like 4 of them have 2 full weeks off of school. So
wow.
Yeah, I know. That's going to be 2 fairly unproductive weeks for me, I'm afraid. But I'll make it work.
Yeah, just look on the right side. You'll never get those moments back.
That's true. Some of those moments I probably won't want back, but like this SNL skit with Matt Damon, him and his wife sitting on a couch at the end of the day, Christmas Day, and they're like, man, that was just such a great day. And he's like, yeah, I think I enjoyed it more than the kids. And then they flash back to like how miserable it was for them that morning and all this. Yeah, it's a pretty funny skit. No, it's good, man. It does make it fun when you got kids in the house. They bring that joy alive. So That's nice.
Mm-hmm.
Well, so in the spirit of Christmas and the holidays, everybody knows a song, The 12 Days of Christmas, but I don't think anybody's heard the song, The 12 Days of Banking.
No, because we just wrote it.
We just wrote it. So here, why don't we play it for you right now? Hopefully we actually have somebody play that. We'll get somebody to sing it. Maybe if we can't, we'll sing it ourselves. So, all right. So in the light of the 12 days of banking, let's go through this list, and we'll start with number 12, and we'll just go all the way down to 1. And I think if you guys have been listening to our show for a while, and especially listening until the very end of the show, you probably know what number 1 is already, but we'll get there. So let's start with number 12. So on the 12th day of banking, your concept gave to you generational wealth. Good one, huh?
Maybe that one should be number 1, but it's so I think we've mentioned this. I remember at a time, Dave, where I kind of thought like Dave Ramsey, right? I was like, well, why am I going to leave them something? Like they need to go earn it for themselves. Right. And I was like, well, and then as I've matured and gotten older and realized, I think it was a part, maybe I wasn't a parent yet, but partly it was a product issue. I didn't know about the right product where I thought it was an either or choice, right? Where I could only have this or that. I didn't realize I could have both. I could have whole life insurance, a lot of it. I could have access to my cash value, and still do the things that I wanted to do on the investment side or whatever. So I think that helped change the way I thought about this whole, legacy, was just having the right product through which to use it, because I get to use it during my life. I guess the living benefits of whole
living
life.
benefits. Yeah.
Yeah.
And the generational wealth is great. And what that does is knowing that the kids are going to inherit a whole lot of tax-free income someday. First it'll go to my wife if I'm the first to kick the bucket or graduate, and then it'll go to the kids, right? Because she's got life insurance as well. Now I have to be intentional about educating them, right? Both financially and emotionally on how to use money, how to use capital, how to grow wealth, and not just how to consume, but how to protect and grow. So now I have a reason to instruct them on that, because it's guaranteed to happen for them at one point in their lives.
Yeah, folks. And if you refer back to Nelson's book, the first book, Becoming Your Own Banker, he talks about an even distribution of age classes, where he's talking about generations of family, but he kind of relates it to, he was a forester, and he relates it to the perfect planted field of, they're probably knotty pine trees is what they're talking about, because that's what gets logged down there in the South. But yeah, and I guess we should mention that I had this conversation the other day, Dave, with somebody on this topic. And not only is it the massive windfall that's guaranteed to be there, but also the knowledge over, our kids likely won't realize that if all things go well until they're probably in their 60s.
Right.
Maybe even their 70s in some cases. So by that point, there could be 4 generations. There could be, they're going to have kids. Those kids likely have kids, and you're likely a great grandparent by that point.
Yeah.
Right. Someone's going to have loans to repay in that family banking system, and that windfall from generation 1 will help fill those back up. Right.
Right. So prepare for the windfall.
That's right. Prepare for the windfall. So
yeah. Nice. Good point.
Love it. Anyway. Yeah.
All right. Next, on the 11th day of banking, my concept gave to me guaranteed to be there. So expand on what's guaranteed to be there.
Well, I think we just talked about it, right? The death benefit's guaranteed to be there. And until the very end, when you graduate, up to that point, you've had access to the present value of the death benefit, also known as the cash value, which you can access via the policy loan. That is the preferred method. I recently had a little discussion with somebody about withdrawals and other kind of non-forfeiture options that we have with whole life insurance. I just think loans is the best way. That's what Nelson thought as well. There might be a scenario where other options are more appropriate, but I don't think so generally. Like, I don't want to surrender PUAs. I don't want to do withdrawals up to the basis and then do loans. I think that's silly.
Yeah.
Anyway, so guaranteed to be there.
Good. And like you always say, term insurance pays out if you die, and whole life insurance pays out when you die. So
yeah, that's brilliant.
Yeah, I got to write that one down. You need to trademark that.
I want a nickel for every time someone says it.
That's almost as good as buy a term and invest the difference.
Yeah, that's right.
Yeah. All right. So on the 10th day of Christmas, on the 10th day of banking, my concept gave to me easy to manage. So this gets,
This
people, especially people who think maybe are the classic overthinkers, or the people who,
the engineers.
Yeah, like, that sounds really complicated to manage, especially if you have multiple policies. How do you know what money is where and which money is earmarked for what? And when it's super easy to manage.
Yes.
Because how many pools of capital are there?
There's only one.
Right. So what's it matter how many different policies that capital is in? It doesn't. Like, it's super easy to manage. If you can do online banking, you can do this.
That's right. I think it's just, a general ignorance of what we're actually getting into. Like, what is this? It amazes me, the general public has very little idea. They know about life insurance, but they have very little understanding. I've had to discuss in depth, just the difference between the death benefit and the cash value. And of course, there's a lot of noise out there where it's like, oh, you die and they keep your cash value. And it's just, you can watch that one dude that we just love, and he says that all the time.
Yeah.
So I think that contributes to people's confusion of, oh, this is so difficult. Like, it's so complex, and it's not.
Especially compared to what? Like,
compared to what?
To, say, a 401k and the withdrawal rules and the RMDs, or how about a 529?
Oh,
like, talk about complexity. Good luck with that. You're going to have to hire a professional and pay them money for you to be able to manage your 529 when you start taking money.
Yeah, I have a client doing that wants to do IRS Rule 72 Tango.
Yeah.
72T. On her TSP, I think. And the TSP apparatus, the gophers that work there were not helpful.
Of course not.
Right.
Yeah.
Not helpful. So basically, it's up to you to, figure out what the tax is with your CPA, I guess, and how that all works. And very interesting. Anyway.
Don't get it wrong, because you'll get penalized.
Yeah, that's right.
Yeah. All right. Moving along, faster, funnier. On the 9th day of banking, my concept gave to me tax-free retirement. How does tax-free retirement play into this? How's that built? I mean, how's that even work?
Yeah. Well, do you want a large tax-free retirement or a small one?
Biggest I can get.
That's right. Excuse me. I'm a little under the weather, folks. Anyway, so this is quite simple. Your policy grows tax deferred, technically. The way we access the value of the policy, the cash value, is through the loan feature. Loans are not taxed. So when we capitalize these policies for a period of 20, 25, 30, and beyond, that many years, the dividends become quite large. The cash value growth becomes quite large every year you make the premium payment. And what we're able to do is we can demonstrate to you very simply how you can take passive income off of the policy. You could take it through policy loans indefinitely, depending on a certain amount of premium you've paid. So it's all going to be relative. You could use the dividend. You could take the dividend in cash. You could use the dividend to pay the premium. You could do any number of things that would equate to taking an income that's not taxed off of the policy. So I think the simplest way, though, to think about it, Dave, is, hey, I want to take, $5,000 a month of passive income off the policy and never pay back loans starting at age 65. Okay. And based on the premium you've paid, we can go in there. We can see if that scenario is likely going to work. But again, everyone's situation is going to be different relative to the premium you paid and how long you paid it.
Right. Yeah. So the more, the better is the bottom line there.
That's right. The more premium you pay, the more tax-free income you ultimately will have. The more control of the banking function you will have.
Yep. If you know what the problem is, you'll know that premium is the solution.
Yeah. You can't pay enough premium. I keep saying that around like people that aren't paying any premium, and they're just like,
yeah.
Hey, sorry. When you know, you know.
Caught, not taught.
That's right.
Oh, all right. All right. On the 8th day of banking, my concept gave to me zero volatility. So zero volatility is, it's not market correlated, right? Most people have everything in the market, and we talk about this all the time. You know, the qualified plans, all the things that your employer likely offers you, it's all market correlated. It's in the market. You can be as diversified as you want if you're in the market, but the fact is you're in one single asset class, period.
Yeah, that's right.
Yeah. So,
people often wonder how that is, because they're programmed to think that everything is tied to the stock market. Everything.
right.
And so that discussion happens. Well, how can the life insurance companies guarantee this? And I was like, well, if you can do a little bit of research and just find out what, life insurance companies are highly regulated, and they can only deploy their capital in certain things. Like, they only have so much in equities. They can only have so much in, corporate real estate, let's say, or, but the majority of it is high grade bonds.
Yeah.
Investment grade bonds of various
Investment grade
types. That's right.
Yep. So, and how nice is that to have something that's not volatile at all? Because in retirement, going back to that tax-free retirement, now you got a non-correlated asset that you can pull an income from while the market's down. So you don't have to pull money out of the market while it's down, which is a terrible thing to do. And which is what most people are forced to do during their retirement or passive income years.
Yeah. One of the biggest topics, there's financial radio on 105.9 here, the local Northern Virginia radio station. It's called Washington's Mall, WMAL. Anyway, one of they can't go 5 minutes, and it's actually a pretty good show, to be honest with you. But it's the traditional or conventional stuff.
Yeah.
But they can't go 5 minutes without talking about your distribution plan.
Yeah. Well, I mean, it's good to think about that, though.
Yeah.
Like, because most people don't think about that until they get to the distribution phase, unfortunately. And then it's kind of like, you've accumulated. Now it's time to distribute, or as I like to say, redistribute. Because that money is now leaving your control and going somewhere else.
Think about this, folks. Oftentimes they're talking about the used to be the 4% rule. Now it's the whatever percent rule. It's kind of a moving target. But, these folks that have accumulated $1 million and they think, okay, I can take out 3% a year until whatever age. Usually they run out of money. Well, that's only $30,000.
Yeah. You gotta accumulate quite a bit to live off that rule.
2 million would be $60,000, so you need a lot of money anyway.
Yep. All right. How about on the 7th day of banking, my concept gave to me uninterrupted compounding. That's a really tough one to fit into the whole 12 Days of Christmas song with all those syllables.
Too many syllables.
It's a lot of syllables. But uninterrupted compounding, how does that work? And I mean, why is that? Where else can you get uninterrupted? I can't even say it. Where else can you get that?
You can get it other places, but not in this way, I would say. So, you could put money in a savings account and never take it out, and it would, enjoy uninterrupted compounding. But the minute you take money out of that account, right now you have interrupted compounding because you're using, you're using that money or a portion of that money.
Right.
So it's
It's
sinking.
not growing for you anymore.
It's not growing.
Yeah.
Right. So in whole life insurance, folks, what we enjoy is uninterrupted compound growth. It's contractual, and people want to like tie a percentage to it. And what's the guaranteed rate? And that's not how it works. You can calculate that if you want, but there's no like given, hey, your policy is guaranteed to grow at X% per year. It's just obviously you're upside down in the first several years anyway. So it's bogus to even think like that. But anyway, yes. So you can enjoy access to your cash via the loan feature, and while you're using the life insurance company's money via that loan, your money is still, inside the contract, chugging along like nothing happened. You'll still get the full dividend with certain types of companies, which we prefer, I guess, non-direct recognition companies. So that's really how it works. It's you have contractual growth and you have dividend growth on top of that, non-guaranteed, but pretty reliable.
Pretty reliable. Probably, 120, 150 straight years.
Yeah.
So, yeah. Cool. On the 6th day of banking, my concept gave to me easy legacy planning.
Yeah.
So what could be easier with legacy planning than saying, oh, well, when I kick the can, hey kids, you're going to get $12 million income tax free. Done. Now the planning really comes down to, well, and guess what? There's no fighting about it because it's all written here. Here's the beneficiaries. It's all evenly split up, and the company sends it directly to you. They're not going to send it to one, to your brother and make him split it between all of you. There's no dispute about it. It just it goes to you, and there, legacy intact.
Yeah. And this isn't to say, folks, this is a different discussion that, well, you can't just leave kids that. I mean, you got to think these children are going to be, likely in their 60s and 70s when this transfer of wealth occurs.
Right.
Right.
Yeah. And guess what? We can change the beneficiary all the way up until the day we graduate.
That's right.
So if my kid is 50 years old and he's a lunatic and he can't hold a job and he's living in somebody else's basement,
not worthy of an inheritance.
Absolutely not. There's no way he's getting that money.
That's right.
So maybe it'll go to a trust and they'll pay him, $2,000 a month as some here's enough to survive on money.
Yeah. I'm thinking about setting one up where they're forced to just use like 80% of the money to pay new premium with.
That's a lot of premium. They better, yeah. Well, okay.
Use some PDF Max riders and just, dump a crap load of money in there. And
yeah.
Anyway, but yes, there's control that you can do, folks. But you understand what we're saying is that it really, we don't have to deal with probate because the life insurance company is literally obligated to say, okay, this was supposed to go to, Anthony, and that's this amount based on when the death when the insured died. Okay, there it is. Simple.
Yep. No dispute.
And if Anthony hasn't figured it out when he's 60, he ain't gonna figure it
out. No, but maybe he's got a kid or two. Maybe you can just leave it to the grandkids instead of old dad.
Yeah, so that's a good point, Dave. I was thinking about this earlier, of how most people are kind of short-sighted. We want to care about our family, and there's some biblical ties to this as well that you can reference. A good man leaves an inheritance to his children's children, right?
Right.
I think that was Matthew, I believe. We don't know what's going to happen with those kids either. Like, you might have a grandchild that's unhealthy, or has a special need,
right,
or whatever. It's going to need care for the rest of their life.
Yeah.
Well, maybe that's going to happen. I mean, I don't know the future. It's almost like the future is unknown.
Right.
But gosh, wouldn't it be nice if, wow, we had some foresight, and hey, if it doesn't come to pass, great. But if it does, hey, at least we're more prepared for it than we otherwise would have been.
Yep.
So,
good point.
Mm-hmm.
All right. On the 5th day of banking, my concept gave to me the golden rule. What's the golden rule?
He who has the gold makes the rules.
Absolutely. So that is the golden rule of wealth. And you got to look no further than Washington, D.C. to understand that pretty well. Those jackwagons in Congress aren't making the rules. The people with the money who control them are the ones making the rules. It's the way it's always been throughout history. People with the money make the rules.
Yep. The Babylon Bee, I follow them. It's a really great satire.
Yeah.
They what did they post the other day? It was Lockheed Martin offering 2 wars for the price of one, or something like that.
Yeah. Right. Yeah. Who's got an agenda here, and who's got?
That's right.
Yeah. So, and when you are controlling your own capital, you're the banker in your own life. Banker gets to do whatever he wants. The banker gets to make the rules. So when you and I do private lending transactions, we get to write the rules for that. If somebody wants to borrow my capital, I'm going to make the rules.
Yeah, no question.
Yeah.
Yeah. You negotiate from a position of strength.
Right.
Just like the bank does, because the bank has all the money.
Yeah, which it helps you negotiate from a position of strength everywhere in life, not just if you're doing private lending, but how about if you're working a job, a job, and you've got a new boss and you can't stand them. Like one of my commanders in the Air Force told me, he said, always have a go to hell fund.
Yeah,
So
I like that.
You can tell somebody, go to hell. I'm out of here. And I've got the money to survive until I find a better option.
I see that a lot working in government, and I work, in a mixed military. It's probably 60-40, civilian to military ratio. And a lot of the civilian employees, or if not all of them, are former military or retired military. And a lot of the officers I serve with are approaching retirement as well, but it's not all of them are in the best financial position, despite being, a commissioned officer with, 24 years,
Right.
Where you should have accumulated a significant amount of wealth, but many of them haven't. So what are they forced to do? They're forced to hang on, maybe do a job they don't enjoy, unfortunately.
Yeah.
And then, get into the job racket at age 48 and interview and resumes and it just, golly.
And what happens when you sign on for another couple years, or you say, well, I'm gonna go ahead and take that next rank. I'm going to go ahead and pin on colonel. What's the first thing? First thing the Air Force does to you is, hey, we're going to send you to the desert for 365 days.
I was going to say they could start another war in that amount of time. I took a survey yesterday, like a career thing. It was just like one of those things I normally delete, but I took the 10 minutes to do it. And I answered honestly, but it was just one of those things. Yeah, like what could we do to keep you in? And I was like, nothing.
I
mean, I'm old. I've done my time. It's time to go. There's nothing. No amount of money could keep me around.
Right.
Anyway, so the golden rule.
Yep. All right. On the 4th day of banking, my concept gave to me no hidden fees. So I had been having a dialogue back and forth with somebody recently, and he mentioned the fees, and he's unsure of what the fees are going to be, and I made it clear, look, there's nothing hidden. There are no fees. The only thing you'll ever pay to the insurance company is premium and interest on loans. That's it, period. The fees, if you want to call them that, everything's wrapped into the premium, right?
Yeah, it's no different than your homeowner's insurance or your auto insurance.
Yeah, good point. Do they charge you fees? No, not explicitly. They charge you a premium, and that premium covers operations. It covers sales,
administration. It covers maybe you got a multi-policy discount, but make no mistake, they're making a profit.
Sure.
And of course they have to, so that they can pay claims, right? They have to be profitable to meet their future obligations.
And if you own a company, do you want it to be profitable?
Yes.
I would hope so.
I think.
And you're an owner of these companies as a policyholder of a mutual life insurance company. You are a part owner, which is why you get the profit returned to you at the end of the year in the form
Yep.
of a dividend.
Yeah. But again, people are so programmed to think, oh, there's going to be fees, there's going to be loan fees, there's going to be closing fees. And I show them, this is how
Transaction, yeah.
easy it is. The transaction is simple. I request loan, the money shows up a few days later, direct deposit. It's super simple.
Yeah.
Everything is baked into the premium, the
And it's
cost of the
fixed.
death benefit, and it's fixed.
The premium's not
Unless
going
it's-
up.
Now we're only talking about whole life or a straight level term.
Of course, we're only talking
Right.
whole life insurance, really, because
Right.
yeah, if you're talking, some of that other twisted, variable or index universal life and all that kind of stuff, premiums will go up if you want to maintain the same death benefit.
Mm-hmm.
In the case of whole life, premiums go down and your death benefit continues to increase. Imagine that.
It's a beautiful thing.
It's a beautiful thing. All right. On the third day of banking, my concept gave to me loans at my disposal.
Yeah. Well, we've kind of beat this dead horse, but yeah, you have contractual access to the growing cash value. There's a pot of money that the life insurance company has. They receive premiums. They deploy premium to, buy bonds or invest in corporate real estate or do whatever they're going to do with the premium. But some of that premium gets lent back to us as policy owners so that we can do what we need to do. And it's as simple as that.
Yep. Nothing much more to say on that.
And it's the best loan that you'll ever have. There's no
Yep.
repayment schedule. You control the repayment schedule. You should repay your loans, of course. We highly encourage that.
Yeah, which is why this concept is only for people who are disciplined and who want to play honest banker. And if you're gonna, you got policies on the kids and you want to make them the owner of those policies someday, make sure they're ready for it. They're disciplined. They're going to repay that loan. Treat it like a real bank, not a piggy bank.
That's right.
Don't just smash it, take the money out and run.
You got to go out the front door.
Yep.
If you don't know what I mean by the front door, you got to read Nelson's book. If you already read it and don't know what I'm talking about,
Read it again.
read it again.
All right, two more. So on the second day of banking, my concept gave to me tax advantages. So tax advantages, we already covered tax-free retirement. So like Paul already said, life insurance, the cash value, the growth on that, because eventually you will have more cash value than you ever paid in premium. And that growth, that delta, that difference is accessible, completely tax-free. So there's a huge tax advantage there. And the fact that as long as you work with somebody who sets it up appropriately and correctly, you're going to keep it from becoming a modified endowment contract. We're not going to get into that. We have a whole episode on that if you want to get into the MEC rule and the infamous MEC. But you build it to stay away from that and stay under that line so you never lose these tax advantages.
Yep. Yeah, I mean, there's not much more to say. It's every dollar you pay in premium in there is going to be a dollar that will never be taxed ever again.
I love that.
As far as when dealing with the policy via the loan feature or the growth of it or whatever.
Yep. It's essentially blind to the IRS once it's in there because they don't care. You've already paid taxes on that money.
That's
Put
right.
it in there, and then unless you surrender it, or you create a MEC, which properly designed policy will prevent that, then they never have to be contacted. Your CPA doesn't need to know about any of it. Doesn't matter.
Yeah. So if you're new to this concept and you're thinking, well, this, the Roth IRA is one of the better things that the government created. Well, this wasn't created by the government, and I'm not restricted to $6,500 a year.
Or zero when you get phased out.
Or, right.
When you make too much money.
Yeah, in a long time. Oh, this is back door.
Yeah.
Anyway. Yes, we know about all that. Thank you. No, but right, like I'm not restricted except my own productivity on how much premium I can ultimately pay. And we were just talking earlier before we hit record. I just got approved for my convertible term policy. Congratulations to me.
Congratulations. Well done.
Yep. So that's nice.
Yep.
I don't have to worry about that at a good rate as well. Not as good as I wanted, but yeah, whatever.
Yeah.
I'll take it.
Yeah. All right. So, number one, on the first day of Christmas, Okay, on the first day of banking. Keep saying, I'm in the Christmas spirit, man.
Christmas is so great.
It is great.
I wish I still believed in Santa Claus.
I know we've got the two little girls still
still
believe
do?
in Santa Claus.
Oh,
And,
that's great.
you know, Hannah's the type of presents don't come out until Christmas morning under the tree. I like to see them under the tree, but yeah, I think it looks nice and it builds anticipation. But now the rules in the house, there's 0 presents under the tree until Christmas morning. So, you know, but I do like to get credit for the gifts. So, you know, I put my own name on some of them.
There you go.
So anyway, on the first day of banking, my concept gave to me control over my capital.
Yeah, I think we talk about control a lot on this podcast, and I think that word control, you know, it touches so many different aspects of what what becoming your own banker is. Not only the mindset, but the, you know, kind of the almost like libertarian, rugged individual type of person that this concept appeals to. Yeah, control.
Everything we do is about control. It all comes back to who's controlling your capital. Somebody in your life is controlling your capital. Is it you? If not, why not?
Controlling some of it, just not enough of it yet.
Yeah. So the goal is to control all of it.
Yep.
Page 48. You know, accommodating the system.
That's right. Expanding the system to accommodate all income.
Yep. Expanding the system. That's right.
Yeah, and I'm learning that. You know, I'm still going through this construction loan process, and it's either this is going to be easy or it ain't. I don't know. It's just you know. It's just bizarre. I would rather have enough capital via my whole life policies where I can just tell the life insurance company to cut me a check and as needed so I can, you know, prepare the lot, pour the slab, crawl space, whatever, the foundation, do the framing, drywall, electrical, plumbing, and that would be so much better.
At a much more beneficial interest rate than you can get at any other bank right now.
No question.
By far.
I think I'm going to be close to 7, I think.
Yeah. Yeah.
And that's a 5-1 arm, which I've never done an arm, but I'm going to do it.
Yeah.
Anyway.
Well, right on. So there you go. The 12 days of banking. I hope everybody enjoyed that. Hope you enjoy your Christmas season. Happy Hanukkah.
Hangover.
That's another good song. The 12 Pains of Christmas.
That song is great.
That's great. I'm going to listen to that right after this. Maybe we'll make that the outro. Yeah. So, all right, everybody. Hey, have a great week. Have a great time with your family. Finish up the year. Take some time off and enjoy it and be thankful for everything that you accomplished throughout the year. And if you just got started on your infinite banking journey this year, congratulations. That's awesome. You should be very excited for year 2, paying year 2 premium and beyond, because every single year gets better.
Yeah, no question. Facts.
Right. Facts. Merry Christmas, Paul, to you.
And Merry Christmas to you and yours, my friend.
Thanks, buddy. Hey, and until next time, everybody, control your capital.
Or somebody else will.
Hey, thanks for listening, everybody. If you'd like to have a conversation with us to see how you can become your own banker, or if you have any questions or topics you'd like us to tackle on a future episode, please send us an email to davidandpaul@theibcguys.com.
And subscribe and leave us a review if you're on Apple. Follow and leave us a 5-star review if you're on Spotify. And please share this with your friends. We'll see you next week.